Okay, recording this video on Saturday, the 23rd of July 2016. It's just gone 2 p.m. here in Sydney. It's coming up to 11 p.m. in Chicago on the Friday evening. Hope you're enjoying your weekend. Hope you had a good week's trading. And apologies for nothing on the blog for weeks and weeks and weeks. I think it's over 4 weeks now. A couple of reasons for that. First of all, extremely busy on a whole bunch of stuff. But primarily, every time I was putting out a video, last few times I did that, I was just getting bombarded with emails, people saying, where are the NinjaTrader version of the multiple time frame better indicators? And I'm so sorry, it's just taken forever to get these done. Software projects being what they are, and kind of being working with me with a very small team to kind of get these things done. We're getting so close though. I'll be so relieved when they're finished, but I'm not going to release kind of crappy code and everybody kind of be annoyed with versions that just don't work as well as the TradeStation ones. So kind of holding off until we get them absolutely right and kind of getting them out there. So all I can say, no ETA, but we're getting so close. Anyway, let's talk some charts. I want to talk about two things. First of all, just comment about the major markets and the stock market indices. Just going to look at a couple of kind of setups over the last couple of days. The E-mini kind of day trades. It's been a little bit, good and bad. The volume has been so light, and we've been really slow on some of these days trading. So that's been a little bit of a challenge. So just talk about that. But the main thing I want to talk about on this video is the commodity complex setting up with the commodity forex currencies. And I think there's a bifurcation coming, a splitting between the different currencies. And I want to talk about that because I think that's kind of fascinating. Plays into my kind of big picture about the setup for crude oil. So anyway, let's just talk stock market indices really quickly. This is kind of a setup I use to look at the four major indices kind of at the end of the day, end of the week, kind of simultaneously. This is the Dow, this is the NASDAQ, this is the Russell, this is the S&P 500. And what we're seeing on a whole bunch of charts, the thing to look at is all these Rambo patterns happening at these new highs that we're making in all of these markets. So here's the NASDAQ ones a few days ago, whole bunch of Rambo patterns. And these are amateurs, kind of low volume type stuff, low average trade type stuff, pushing up to new highs. That's what generates a Rambo pattern, and you can see them on all of these different daily charts with a little bit of exhaustion and bearish divergence kind of coming at these highs. But on the daily charts, we're playing around resistance at these levels. So for breaking into downtrends and severe weakness, we need to see supports broken, like we saw here, supports being broken. So at the moment we're just playing around these new highs, but we're running out of oxygen. And you can see, if I show you what this kind of typically looks like on a longer term picture on the S&P 500, you can see coming into these highs, they're all characterized with Rambo patterns. Then we just go through some days of churning or whatever before some kind of weakness kind of comes in a lot of these spots. But not going to call any kind of massive decline or kind of sell-off kind of going on, although it's interesting what the commitment of traders kind of did this week. But I think it's early days, but we're kind of playing around those highs. Weekly charts, same kind of thing kind of going on. We're busting up to new highs on very light volumes and so on, but we're above resistance. Again, these are the Dow chart, the NASDAQ chart, Russell, and the S&P 500. You can see resistance busted through with Rambo patterns, resistance busted through, and so on. So kind of just weak volume, weak kind of activity, kind of pushing to new highs. Partly summer doldrums type stuff, but for the time being, we're continuing to kind of creep up and up. So let's see kind of where this takes us to. So that's kind of big picture, and just noticing all these Rambo patterns and amateur up bars to new highs. In terms of day trades, Thursday was a bit of a crappy day, but Friday was good. Let me just show you the setup for Friday. So this is what the multiple time frame on system view of the world looks like on the TradeStation charts. If I flip it to with better pro-am and better momentum on, same chart, kind of flip between the system view, strength in red, weakness in white, and the system kind of signals kind of going on here. You can see what's going on. So End of Thursday, beginning of Friday, kind of going on here. We had a little bit of weakness shown with those white bars kind of going on here, and I was trying to get short. I got short 58.5, and it never kind of broke anywhere after the beginning of the day. Really kind of had a little bit of strength, and then we had an exhaustion sell kind of signal here. So I busted out of this trade with a 1.5 point loss kind of here, because it didn't break down, didn't go. It went pullback end of trend there. You can see it's printed underneath the highest time frame support that kind of comes in to hold this entire move here. But it never kind of traveled very far, so I took a small loss on that. Then we set up for this long trade, because what we've got going on, we've got an exhaustion sell signal, then the bullish divergence signal kind of comes in here. You can see this, there's the exhaustion sell, bullish divergence on better momentum kind of comes in here, and then we set up for our uptrend move. We had a low risk entry point at this point down here. I was late into this move. I only got in at 60.50, and then we had to sit through this weakness kind of going on here until the bullish divergence pattern kind of came in. But as soon as that was kind of good, we kind of held this intermediate time frame support here, and bang, we busted into this uptrend for a good move. And on the way, we had exhaustion sell into, again, supports coming in. It was a pullback support on the lowest time frame, intermediate time frame support, and we kept on going up. Now, because I'd had a 1.5 point loss on this first trade, movement target out, I was in at 60.50, out at 66 even for 5.5, and then so the net for me was full for the day, 2 points, which is quite happy with that. Just out before this exhaustion buy kind of going on here. And as you know, that happened right at 11 a.m. There's the 11 a.m. Vertical line kind of going on there, and what that means is if we're busting to new highs there, it's unlikely that we're going to reverse, having had some ends of trends and bearish divergence. We're not going to reverse for the end of the day after strength into 11 a.m. and a reversal before 11 a.m. That's the kind of rule. Unless we've reversed before 11 a.m., the highest likelihood trade is that we'll have a continuation and no reversal during the day, and that's what we did. Just kept on breaking to new highs by a little bit, just running stops, bang, bang, bang. I don't know what it was like kind of during that part of the day, but it was pretty bloody treacly. It was just slow, and it has been the last few days. The market's got really very little volume kind of going on. We're barely doing a million contracts a day, and it's just slow. It's not fun. Thursday I did not have fun at all, so let me just back it up to show you what was going on Thursday. So this is close on Wednesday and the open on Thursday, and this is the activity on Thursday. And I was trying to buy the breakout, sell the breakdown. Just this whole move here went on for hours, and I ended up losing just over 4 points in this whole schmozzle kind of going on here. This was an exhaustion sell here that showed that people were kind of getting on board a move to break to new lows, and you can see those white bars going on here. That was the weakness, and this should have broken in almost straight away to a downtrend at that point. But I think Draghi was speaking, and there was other things kind of going on, and I was over trading in a really narrow range. This was only about 4 points top to bottom, so it was kind of a not good space. And then as soon as we had all this strength, I was like, oh, maybe this support area at 65 or whatever it was is going to hold. That's exhaustion sell, bullish divergence kind of comes in, and we're going to break to new highs. So I was trying to go long at this point here, and of course that was incorrect. We reached resistance at this point. Then as soon as we break out of that channel at that 65 kind of level, bang, this thing took off the downside. These exhaustion sells are showing you the strength of the selling, kind of getting the move going. It kind of runs out of steam initially a little bit, then kind of keeps going, and then that is the exhaustion sell. That's the exhaustion sell getting the move going, and then this is it, then picking it up at the bottom at the end of the day, kind of down here after a really nice move, 10-point move to the downside. You can see all of the white bars kind of showing the weakness kind of going on there, and that's the end of that move, and then we just have a little short covering rally at the end of the day. Kind of people closing out their positions and so on. So Thursday for me was a crappy day, but Friday was a sweet one. So kind of swings and roundabouts. All right, let us talk about the dollar, US dollar currencies, commodity currencies, and what's going on in copper and crude. Because I think we've got the commodity complex is starting to set up, and I've been waiting for this. So if you go back, if you're interested, going back to the beginning of the year, I put out a forecast for the year just talking about how we would have a continuation of the sell-off in crude, but be looking for a setup. So the sell-off during the first quarter testing during the second quarter, and then during the second half we would have a trend change in crude to the upside, and that could be really kind of interesting to trade. Well, at the beginning of the second half of the year, we're almost a month into it and so on, and we're still pressing down and testing those lows in crude. But at some point, that'll be all over and done, and the reversal will happen. And I think that commodity complex, because the two most important commodities from an industrial, kind of world growth GDP perspective are crude oil and copper. And the kind of commodity currencies that go along with that, particularly the Aussie dollar and the Canadian dollar and the Russian ruble, are extremely kind of important. So I want to show you first of all the commitment of traders' view of what is going on in the currencies, and then show you the chart setups. So this is again a bit busy, I'm afraid, all in one, but obviously on a big screen this looks pretty sweet. This is the kind of large investable assets, if you like, so equities and bonds, and then crude and copper, and then we've got gold and silver here. On the second half of this chart here, we have the currencies. So you've got dollar index and Japanese yen. These are kind of the carry trade currencies with the low interest rates, where people kind of invest in risk assets around the world using those currencies. Then we've got the European currencies, the euro and the British pound, and then the commodity currencies, the Aussie dollar and the Canadian dollar here. Now, below these charts, we've got the commitment of traders, and I want to show you a couple of things. So first of all, the weakness that we have in Europe is being played out in the commodity commitment of traders numbers. So this is the euro chart here, and we got to, I think it was $1.05 versus the USD, or close to, and I was thinking, well, maybe you go to parity and so on. Look at all of the commitment of traders numbers kind of down here. Now I take the professionals, I flip them upside down, and it kind of moves nicely with price, and you can look at divergence patterns that way on here. Yeah, we had one bullish divergence kind of down here, but we're coming back down to that 110, 18, 15 kind of level, whatever. Here's the commitment of traders just going down, down, down. That's showing that the professionals are not yet kind of interested in kind of reversing their positions, because we've not seen kind of bullish divergence patterns kind of come in with that move. But so for the time being, not turned around. So the euro continuing, expect a continuation of the downside. British pound, same thing. Obviously this is Brexit kind of going on here, and you can see, look at this commitment of traders. So bullish divergence, bearish divergence, bearish divergence. Yeah, this was an early signal, didn't work, and we've kind of continued down. Because of this, the trend of that commitment of traders kind of going down, continued weakness, until we start seeing this kind of pointing the other way and starting to see bullish divergence patterns. We're not going to have a signal of commitment of traders there. So the pound and the euro looking pretty crappy. However, commodity currencies, the Aussie dollar and the Canadian dollar, different story. Yeah, we've had some weakness this week in the Aussie dollar, kind of coming down to 75 cents and so on, having come up to close to 80 kind of here. Bullish divergence kind of coming in, but look at the trend and commitment of traders, the way commitment of traders is kind of going the other way. This was one of the nicest calls I made a couple of years ago with the end of trend into the Aussie dollar, and had this kind of real kind of downtrend move, and I've been short the Aussie dollar pretty much the whole way. I'm getting to about break even in terms of Aussie dollar versus the US dollar, but at some point I still think there's going to be a little bit more weakness in the Aussie dollar, but this is interesting. The bullish divergence kind of patterns coming up here, and the commitment of traders flipped to the positive side here, starting to race the other way. So that's interesting. And then when you put alongside that with the Canadian dollar, same thing. It's like huge decline here. Bullish divergence kind of comes at the bottom at 68 cents, and same thing. We're above the zero line, kind of going up on this side here, as we're getting a little bit of weakness in the Canadian dollar. So I'm just wondering how far the Canadian dollar is going to roll the other way, and the Aussie dollar. Pound and euro could see those kind of really starting to kind of fall apart, and getting some big ranging type days and weeks. But with the Aussie and the Canadian, I'm wondering if the push downs here are going to be more muted, and start to put in kind of bullish divergence, and ending this move on the way down and setting up for the commodity complex. Because what we have is on the other side, Crude's been good this whole move. I mean, It's difficult. I talked about crude as being very similar to the way the pattern in gold had changed, because you can see it's just been above the zero line this entire move here, and this is one of the reasons why I got myself in trouble calling a breakout at to above 110, 120 in crude almost 2 years ago now, and I lost a bunch of money on this move down here. Anyway, so now I think we're kind of coming into possibly setting up, because we're testing these lows in crude, and this is the sequence that needs to prove itself over the next couple of weeks, from which we can start to have a rally in crude. And the crude story is, starting to pick up a little bit in kind of commitment of traders. It's above the zero line, but it's been above the zero line for a while. It's more like the trends in the commitment of traders is more important than the positive or negative reading here, which has been the story in gold and silver for 10 years. And then copper, that starting to see some bullish divergence patterns kind of line up, and then the copper patterns kind of coming up, commitment of traders coming above zero, and so they're starting to support potential rally. I said $2 on copper was kind of a critical level, and we've just been messing around, plus 10% in copper for the last 6 months, and so are we getting ready for this thing to bust up? So that's what I see. I see these kind of important commodity assets and the important commodity currencies starting to show signs of weakness, whereas the euro and the pound looking pretty dodgy. Just on dollar index, just to show you what's going on here, this is the breakout in the dollar index that is being supported. So here was the beautiful bullish divergence patterns kind of down here that caught this rally. We went from 80 to 100, and now we've come back in, and it looks like commitment of traders, we're starting to break back up above this kind of little resistance into the next kind of move up, which is the biggest components of dollar index are the euro and the yen, and because the euro is looking so crappy, and that's why the dollar index is strengthening, and we've had real weakness in Japanese yen. So that's commitment of traders. That is, it's interesting, but it's not the signals I use to kind of trade. Let me show you the signals on the multiple time frame view of the world. Dollar index, here we go. This is what we've had. The important thing is on these highest time frame, play with the big picture support and resistance. Here's breaking, the support that we had in the dollar index down here at 80 kept us in here to resistance up here. Support held, resistance held, support is holding here, and we're now breaking back up after we've had a little bit of weakness. These big ranging, big professional bars are really important. Let me show you that here. Bang, bang, bang. We had a little bit of weakness trading out of this. Talk about these big blue professional bars. Bang, when we kind of get resolution after what goes on here. That was the Brexit kind of vote, pretty sure on that. And now we're kind of busting up. So we've got our uptrend kind of in place, busting up in the dollar index. So that's kind of all good for dollar index. And because dollar index is going up, you get some kind of weakness in crude and copper just because they're the inverse of dollar index. British pound. So here we go. It's been a nasty downtrend again. Go to the videos and I'll show you. This is why I thought there was strength in the pound back in April of last year, because we had end of trend support kind of coming in here. We ran out of strength after resistance kind of comes in. Beautiful little low risk entry point here. All these white bars showing a downtrend kind of going on here. This was Brexit. Bang, exhaustion sells kind of going on, and we put in a pullback resistance kind of Thursday, Friday, and that's kind of, let me just bump that up. There we go. Pullback. So that's got to go pullback end of trend. But we're below supports on all these kind of significant supports. So they've got to run pullback end of trend. So pounds heading down, euro heading down, same deal. So again, keeping in tune with resistance, support breaks in, we've got to go pullback end of trend on the highest time frame. The resistance kind of came in here. We've got this to kind of play down. We've got all this weakness kind of going on. That was Brexit. Again, watch those big blue professional bars. When you get resolution, we often kind of come back into the zone and then figure out, we're going to break through the highs or the lows. No, we're breaking through the lows here. Whoops. All my charts look like they're going to be refreshed on TradeStation. Okay, that's it. So anyway, so we're breaking through the lows of that big blue professional bar. We're below supports on these things. Look at all this kind of weakness kind of going on here. So, and these got to go pull back under trend. So the next kind of big clunky moves down are going to be down euro, down British pound, up USD because of that. But here's Canadian dollar. Canadian dollar is we had the big sell-off. break into a little bit of strength that runs into the pullback resistance on the highest time frame, and then we come back, we trying to just push and test and whatever, and now we're coming to double supports here. We've got little dots here supporting the lowest time frame, slightly bolder dots here support on the intermediate time frame. We're breaking both of those at the same time on Friday. So this we could kind of fall out of bed a little bit, but it's running pullback to end of trend on this highest time frame. Down here it's 70, 68. It's really important levels, and so this is the weak kind of move down where we're testing. That I expect this to kind of be picked up at some point. So the kind of things that I'd be interested in seeing is, do we get amateur down bars or blue professional bars that hold and we break above the highs again and so on. Those are the type of things as this thing runs out from pullback to end of trend. So this is better sine wave on this highest time frame. Pullback to end of trend, that cyclical weakness that we're having on crude, that's the thing on Canadian, is what I'm interested in seeing how it sets up. Same thing on the Aussie dollar, but the Aussie dollar is a lot stronger through here. But it was a downtrend coming to this strength going on here. We've had this series of strengths from 70 cents to 78 cents, but all happening underneath resistance on the highest time frame, and so that needs to play out a pullback to end of trend going the other way. The little uptrends that we've had, there's been one little one on the lowest time frame, this so that pullback to end of trend, a pullback to end of trend on the intermediate time frame, and now we've got a triple resistance going on here. Resistance in the highest, the intermediate, and the lowest time frame. It's still showing a little bit of strength, but that because we're testing the lows will kind of push us lower, and we'll see where this kind of breakdown goes. And the question is, how strong is that going to be? My guess is on the commodity currencies it's going to be a weak move down as everybody starts getting interested in a longer term move in the commodities, industrial commodities, copper, crude, and the commodity currencies, Aussie dollar, Canadian dollar. And so here's what's whoops, I'll show you on this chart here. So here's copper. So again, big downtrend move, all these white bars, bang, 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 goes into exhaustion cell. End of trends kind of come in, but we're testing at the moment. So we've overshot support. We've come into resistance on the highest time frame. We're just mucking around up here. It's showing strength at the moment, but we've got to test down. We've got to run out the clock on this. So this is the better sine wave. We're running out the clock until this kind of comes in and pushes down. When that cross happens, if we start to break above, break above, $2, 23.25. Sorry, that's 23.25 kind of here, and towards 30. Then that will show that we're on the way in terms of copper. So copper's nice and strong at the moment, and any weakness we want to see kind of the professionals kind of take advantage of that. And then crude. So this is crude. This is the massive downtrend, all these white bars into our exhaustion cell, bullish divergence kind of comes in here, and then we got to play out pullback to end of trend again on the highest time frame. And so this weakness that I've been calling for the last couple of months really, because this was kind of playing out at these highs and needed to see this kind of go down. So let's see how far it kind of pushes down, and whether the sell downs are going to be explosive on the way down, or just kind of weak sell downs testing and giving an opportunity for the professionals to kind of step in this 35 to 45 kind of area to hold support. And then once we got that testing done, that's it. That sets us up then for kind of a move the other way. So it's the timing of this. This is this better sine wave on the highest time frame has crossed, is moving down. We've got to go pull back to end of trend on this highest time frame, and that kind of sets us up. So the commitment of traders is starting to show us that there's strength in the commodities and the commodity currencies, but we just need to run out the clock a little bit, and going to see some weakness in these commodities, but fairly if it's a good setup for the next uptrend, then it'll be fairly kind of tame on the downside as those tests kind of going and the professionals kind of take advantage of any sell-off, and then they step in, and then we kind of can reverse and go the other way. But in the meantime, the euro and the pound not looking too happy, which will be good for the dollar. Alrighty, so there we go. I don't know how long that video ran for. Apologies, it kind of ran long, but yeah, it is what it is. Hope your trading goes well. If you're kind of in the northern hemisphere and getting cooked up there, just think of us in the southern hemisphere where it's not so fun. It's kind of cold down here. Anyway, hope you're doing well, and good luck with your trading next week.